And now, all right, welcome back, everybody. Welcome back. Once again, my name is David Baptiste. Um, Earlier today, we was going over supply and demand zone, and we was focusing on the supply and demand zone on a monthly time frame. So right now, we will be focusing on supply and demand zone on a weekly time frame. As of right now, I already have the red line prepared for us. Um, where is it? There we have it. I already have the red line prepared for us. For this is the color that I'll be using to draw out my weekly supply and demand zone. All right. So once again, we double click on the shaded rectangle. It's the fourth red to the bottom or the fourth red to the top. Just give it a little bit lighted, lighted color. It doesn't have to be really dark. It could just be a little bit light. It could be dark depending on how you like it. And the coordinates has to be about 10 pips away. All right, so just make 7, 7, just like that. So once you're able to do that, you're gonna copy. There's two options where you copy. You can actually copy here, clone copy, or you can press Command C, Control C, and just press Command V or Control V. All right, so we're gonna make about like 10 of them, and then we're gonna start dragging them to the points where we see support and resistance. So, for example, this would be a good support and resistance because this was once known support, and it became a what? I mean, once resistance, and it became a what? A new support. Okay, this area as well too. This is a good place. We have a little M pattern, as you can see here.
Question while you're doing that.
Pardon me?
What is one of your support hits where your monthly already has a support? Do you just disregard and move on to the next point?
Wait, say that one more time. I can't hear you. I'm sorry.
I'm sorry. I have an air conditioner going in the background. If you're on your weekly right now and
Yes, correct.
6 lines in and you come to a spot where the gold line from your monthly is already hitting whatever, do you just disregard placing a red line there as well and just move on to the next
yes
point?
yes because
okay.
the reason why you want to disregard it, just so it doesn't make your chart too colorful, right? You don't want anything to be overlapping one another, and on top of it, the gold lines are more I would say, what's the word? I just had the word. Are a stronger supply and demand zone than the red lines. So whenever you see the gold lines in the market, it gives you a little bit more confident that there's going to be a reversal in the market, or the market is going to respect that zone for that time period. So once you start going to a smaller time frame, the supply and demand zone on a smaller time frame are not as, I guess you could say, respectable when it comes to the supply and demand zone on a larger time frame. So that's why we start on the monthly and then we work our way down. For example, if we were to do a 5-minute supply and demand zone, right, like right here and right here, more than likely it's not going to respect for a long period of time. It's going to break out, and that's not what we're looking for. We're looking for it to see where the market respects so we could obtain as much pips as possible within that range or within that zone.
Okay, that makes sense. Thank you.
No problem. So once you see a gold line, understand that, all right, there's something prominent is going to happen. Once you see a red line, you could think the red line as a person that's second in line, or second in line. You know, how would I say it? It's just like military, right? The goal lines. Oh, there we have it. Okay, there we go. The gold lines are the lieutenant or the general. The general is higher than the lieutenant, correct? I believe. I believe. Okay. All right. So, for example, the gold line is the lieutenant. No, the general. The red line is the lieutenant, and the green line is a soldier. So there's a level of command that's going on, especially in the market as well too. So whenever we see a gold line, understand that all right, something major is gonna happen. When we see a red line, then you could figure out that something major is gonna happen, but it's not gonna be as major as the gold line. And once you work your way down to the blue line, which is the 4 hour supply and demand zone, you can think, okay, something's gonna happen in the market, but it's not gonna be as major. All right. So it's a I guess you could say it's like a command in office. There's certain people that you listen to first, and then there's certain people that you listen to afterwards. All right. So another analogy could be the goal line is your CEO. The red line is your general manager. The green line is the manager, and the blue line is your supervisor. So more than likely, if you see the gold line and you see a blue line next to each other, you can override the blue line because you know that the gold line is a major supply and demand zone. It's a major zone in general. So if you see a goal line, understand that that's your CEO. So normally you're gonna listen to your CEO more than you're gonna listen to your supervisor. Okay, so all I want to do is just simply just finish getting these touches. Okay. All right. So I'm not gonna do the whole entire chart. I just want to focus on the zone that we're in right now, from 2018 and onwards. So this is like the zone that we're in. Okay. So I pretty much got all the touches that I needed in this zone. So once you're done having all these touches within the zone, then you go on a smaller time frame, which is the daily time frame. Okay. So now once you're in the daily time frame, as you can see, the monthly and the weekly zones, they cover up majority of the touches that you see. So the only things that's left is like a few touches. And these are going to be our daily time frame, our daily time frame zones. All right. So we copy and paste. We click on this. We go to style first. We go to background, and you can choose whatever green you like. Normally, I choose the third green to the bottom, and there you have it. You go to coordinates. It has to be at least 10 pips away from one another. 5, 6. There you have it. And there you have it right there. Once you have that, you just simply copy and paste a few of them because I don't think we need a lot. As you can see, there's one right here. There's one right here. There's the perfect one right there. Okay, there's one right there. It became support, now resistance. That's powerful. Okay, right there as well. So for this resistance, this is probably indecision right there when the market is going sideways. Okay, and yeah, I think we need one more. And that one could go right in the middle. Support. It supported that 3 times. All right. So once you go on the smaller time frames, it gets a little bit easier because literally all the touches are pretty much marked up already. So now the 4 hour is a little bit different. than the supply and the daily, the weekly, or the monthly. So usually my weekly would be like 6 to 8 pips, but I just wanted to give you like just a brief, demonstration on the daily. So now this is a copy and paste zone, right? So this is going to be a little bit different. For this zone, you're going to click on it. You're going to go to style first. Click on background. You can pick any blue you want. Normally, I pick the third blue to the top. And then once you do that, don't press OK yet. You go to coordinates. And one thing I said about the 4 hour, you would want to make it about 3 to 4 pips in range. So the difference is 3 to 4 pips. So I'll have it from 56 to 60. So that's a 4 pip range right here. And then you just simply copy and paste where you feel like the 4 hour is needed. I feel like it's needed over here. I feel like it's definitely needed over here. It's resistance, 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 support, support, resistance. That was a good one. Right here. This is probably indecision, but this is a support as well. Oh, definitely over here. Support, 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 resistance, resistance. Oh, and the market is right where the 4 hour zone is. So let's see if we see some type of respect. Plus the market is slow right now. So we're just gonna make a few more lines, copy and paste. We're gonna get the zone right here. Resistance, support, support, somewhat resistance, somewhat, yeah, definitely resistance over there. Okay. Where can we find your recorded videos? Oh, I'll be uploading them on YouTube, and I'll just send out the link to. Oh my goodness, I can't even send out the links. Yeah, I'll upload them on YouTube, and then I'll ask someone to send out the links for me, if anything. I'll text somebody, and then they can send it out to everyone else. Okay, so let's just get these little points. Anytime, anytime. Okay. All right. Do you guys feel like I'm missing any place? Or did I get everything?
That one point at the bottom.
Wait, over here?
Yeah.
Okay. Anywhere else?
Yeah, where you just moved the line from.
Oh, right here?
No, yeah, about right there.
Well, not necessarily this one, because
okay.
it's. Well, you know what? I'll give you
It's a
that one.
support and a resistance.
It is. It is. It is. I was looking for a major one where there's a lot of touches.
That would be above the green line that we were just at.
Right here?
No, just up a little more.
Right here?
Right there? Well, no, I was thinking further up, but.
Right here?
Isn't there? Yeah.
Okay, yeah. No, I'm just playing with you. That's actually what I was looking for as well too. I was just making sure. Yes, that's one of the major plans. Because if you scroll in the back, it was one support. I mean, yes, support. It kind of broke out. So that's 2, 3, 4 support, 5. Wait, resistance, 5 support, 6 resistance, support.
Oh, that's a big one.
Yeah, that's a huge one. All right, so I believe we have our monthly time zone, we have our weekly, we have our daily, and we have our 4 hour. So I believe that we are done here for supply and demand zone. So one thing I really wanted to do was to actually show you guys how I use my supply and demand zone as well too. Yes, it's good to teach you what you guys can add onto your trading, but it's also to show you as well too. I feel like this is more of like the meat and bones of how I'm very profitable just with this and Fibonacci and trend lines. All right. So for example, I don't trade this area. This is very sloppy. This is also um, it's a flag pattern. Hey, there you have it. Okay. I don't trade that area, but an example that I would want to give you is this. This is literally like a very good example, right? So the market gave me three um, bullish engulfings to the upside, right? It retested a little bit, correction, and it rallied up to the 4 hour the 4 hour demand zone. The wicks on top, the wicks pretty much shows you exhaustion in the market. What exhaustion is that there's a lot of buying pressure losing. There's a lot of pressure that is being lost in the bullish market. So there's more selling pressure than there is buying pressure. So whenever you see a lot of wicks like this, there's going to be a selling pressure happening. Whenever you see wicks on both sides, understand that this is news. This is definitely news. All right, this is news as well too. You can tell which ones are news and which ones, yeah, this is definitely news as well too. All right, so what you would want to do is once you see the market rally up, you can draw your fibs from the low to the high of the market. Okay. And so once you draw your fibs from the low to the high of the market, what do you see? You see that the market respects at the 38.2. The market respects at the 38.2, which is above. Give me a second. What's it? What's it? All right. So the market, it rallied up. It broke out this daily the daily demand zone, and it retested above the daily demand zone. So that created a what? It created this demand zone is now a supply zone. So the reason why I think this is a major supply zone is because the candle, the bearish candle, which is the white candle, was formed before the closing of being inside the previous demand zone, right? So whenever you see a candle being formed outside of the zone, understand that the very next two candles, if the candle gives you a bullish engulfing, this is a bullish engulfing. Engulfing pretty much means that the candle is overpowering the previous candles. So it gave you a bullish engulfing. That means that it's respecting this zone, and now we're in a new zone. So by me drawing my fibs from the low to the high, it gave me 38% of the market back. It retested on top. This is the perfect retest. It retested on top of the daily zone. It was once my daily demand zone, but now it's my daily supply zone. This is a good trade for you to enter into the market. So now, how does that work with trend lines as well too? You can draw a trend line like this. It broke through the trend line. So this is known as a breakout. All right. So we have multiple confirmations that this is a very good trade. We have a bullish engulfing. Sorry for the caps, y'all. All right, we have 38.2 PRZ level. PRZ is just price reversal zone. Okay. What else do we have? We have a retest on top of the daily supply zone. Okay. The different level on the Fib. Yeah, absolutely. Well, we could definitely have a class on that as well too. It's a lot of information when it comes to Fibonacci, but literally Fibonacci is all around us. Fibonacci is literally everywhere, not just in the market, but in real life. It's in the universe. It's literally all around us. So the Fibonacci level is based off of Fibonacci sequence. Some of the levels that you see here are not based off the Fibonacci sequence, but some of the levels are seen as you can see them on my screen. The reason why they are here because they are a percentage of their I guess you could say their counterpart. For example, 25% is close to zero. The difference between 0 to 25 is 25. The difference between 75 to 100 is 25, right? But the Fibonacci sequences are the 61.8, the 38.2, and yeah. And well, if you want to count the 89, which is the 88 as well too. All right. So this is how Fibonacci sequence works. I don't want to get too much into it, but the Fibonacci sequence starts with the number 1, right? The way the Fibonacci sequence works is that you have to add the previous number, which is 1, and you get a sum of 2, and then you divide it by the recent number, which is 1, and you get 1.5. But now, if you were to continue this, I'm not going to do all of it right now. 2 plus 1 is 3, divided by 2, and then you get, you get your sum and stuff like that, right? Oh, no, this is 2. This is 1.5. I'm sorry about that. All right. So if you continue this all the way down, once you start adding numbers together and you divide them, it's going to give you the sequence of 1618, which is also known as the Great Golden Ratio. And this number lasts through all eternity. So no matter what number you add and divide, it's always going to give you 1618 after a certain time point. Can you explain it? Okay. But yeah, so I just want to stick with the basics for now. The Fibonacci levels is 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144, 233, 377. All right? And so forth, and 610, if you want to click. All right, so these are the Fibonacci sequence. So now when you divide 610 by 377, you're going to get 1618. So that's the reason why a lot of people use Fibonacci. Fibonacci is known for growth and expansion. So you ever always wondered why Fibonacci works on a daily time frame, and it works on a 15, and it works on a 5-minute, and it works on a 1-minute? The reason for that is because it creates a how would you say it? How would you say it? It's like an algorithm. right? Regardless of the size and the distance between one candle to another, it's always going to give you some type of retracement where it's going to base back to the Fibonacci sequence. All right. So if, for example, if we was to go in a 4-hour, oh yeah, this is perfect right here. There you go. It gives you what? From the high to the low, this is an impulse. It corrected at the 61.8. And then what happened? The market went down. That's on the 4-hour. Let's go on the daily. Oh yeah, I think this is a good one too. This looks like 60%. Sorry. Okay. There you have it right there. Okay, it's definitely not 60%, but it gave you 75%. Right? Definitely gave you 75%. But if you wanted to do from this high to this low, it gives you 38%. 38%. So regardless of what time frame that you're looking at, the market is always going to give you your percentage back. And then that's based off the Fibonacci levels. Okay. So from this high to this, from this low to this high, correction 61.8 on the weekly time frame. On the weekly supply zone, I apologize. All right, and there you have it. So that's why a lot of individuals use Fibonacci. Fibonacci is a great tool to use just to measure how much are you going to get back from the market and where the market is going to go. You know, it allows you to understand and give you a better assessment of what the market is going to do next. All right, so I just want to go back to this real quick. So from the low to the high, it gave us correction of 40%, 38.2. It retested on top of, at first it broke out, retested, it gave us 38.2, which is, it broke this trend line that we created here as well too. This is a perfect opportunity for the market to go bullish. And so that's what I look for, honestly. That's all I trade. If the market is not in a trend, then it's not your friend, and you shouldn't wait. You should wait. You should definitely wait. Like right now, this is not a trend. This is consolidation. But a lot of people would trade this as a flag pattern, a bearish flag pattern. And you have the opportunity to go in for a sell on the breakout, but retest is a little bit more conservative. It's a little bit more understandable for you to read, and it just helps overall. So this is how the supply and demand zone on top of Fibonacci and trend line. This is how you're able to be a little bit more accurate when it comes to your trading. So another thing, the market spiked up. The market spiked up and it spiked down. The market rallied up in a continuation to the uptrend and it hit the monthly zone. But even though it wicked the monthly zone, what happened on the 15-minute? It closed below the monthly zone. Did it not? So it closed below the monthly zone. So this gives you a perfect opportunity for you to get in the sell. If you're going on a smaller time frame on a 5-minute, all right. As you can see, there's a little bit of consolidation, and there's a doji. So let's see if we could try to get an entry on the 1-minute. All right. So let's just scroll back. There we have it. Okay. All right. So now if we used to draw our fibs from this high to this low, What do we have? We have 61.8. 61.8, right below the monthly zone. This would have been a good opportunity for a selling market. So you can use a different time frame. This is known as time frame correlation. When you go from one time frame to another, just to give you a little bit more understanding of where the market is going. All right. So even if you didn't get in here for the sell, that's okay. You would always want to wait for the retest, which is the retest right here. It gave you 618 below the monthly zone. It gave you a little double top, did it not? And for those that like tea in the morning, this is a beautiful teacup as well too. All right, I love tea. I love peppermint tea. So it gave you a little tea, a little double top, and the market went down. And as you can see, the market didn't come back up. It kept on going down. All right. So this is what I do. I usually go on a smaller time frame, look for a good entry, and if you stayed in the trade for about an hour, 16 minutes, you would have got it. You would have got it for 68 pips. Depending on your lot size, you could have made a lot of money. Okay. Does anybody have any questions? All right. So this is my future assessment. One thing I would want to see next week, I would want to see the market, even though it looks like it's going down, I would want to see the market being a little bit more bullish to the point where it gives us a little consolidation. And then respecting this monthly zone, and I would want to see the market go down. That's my assessment for next week. My assessment from last week was that the market, especially GJ, it was going to be bullish. And the market has been bullish. It's been bullish. All right. So I wanted the market to go back to the zone because one thing I learned about zones is that they need to go back to one another eventually. It might take a little bit of time, but they need to come back to each other eventually. So from the 28th to the 5th, which is about 6 days and 22 hours, it went back to each other's zone, which is about 300 pips. Okay? So I know there's a lot of individuals that actually trade from zone to zone. And if you want, you can do that as well too. So if you want to trade from like, let's say, your red zones, right? This is your red zone, demand, supply. Once you start seeing wicks on top, you just go in. You see there's a little consolidation. It gives you a bearish engulfing. It gives you two bearish. Well, it's not bearish engulfing right here, but it gave you a bearish engulfing, and it's engulfing the last 4 to 5 candles. This is a selling opportunity. If you wanted to wait, you can wait for the retest. Excuse me. And you could have got in for the sell and take it straight down to the supply zone. Okay? Now there's times where it's not gonna go back up all the way to the supply and demand zone all the time, but eventually, like I said, it's gonna get there. So even though it tried to break out of this supply zone, what happened? It came back and it retested above this, and it touched the demand zone. And then what happened when it touches this demand zone? It retested and came back down to the supply zone. Ladies and gents, you can do this all day, literally all day, all day, all day, all day. All right, and if you want, you could do the daily supply and demand zone too. So it went up, it hit the demand zone. So it tried to stay up here. I'm guessing it's trying to break out, but it doesn't have the buying opportunity to break out as of right now. So it gave you a bullish engulfing. This is a false move, fast move, false move. This is a false move to the high. And then what happened? You could have sold from your demand zone all the way back down, or you could have waited for the retest right here, all the way back down to your supply zone. And then it came back up, it gave you a little W, all the way back up to your demand zone. All right? So there's so many opportunities, so many ways to trade. You have the opportunity to do so if you want. And I hope this call has been a blessing, informative call to you guys. And thank you guys. I wish you guys the best. Take care.